Hey everyone, thanks for watching. As promised, we are bringing back Sean Penn to the show. We're going to talk about hard money. We're going to talk about what it is, different components of it, and most importantly, if you have a project, what states can Sean help you service your needs, service your real estate investing needs. So Sean, welcome back.
Hey, Michael, thanks again for having me on the show.
Absolutely, man. Just in case somebody didn't watch that tremendous video we just did about the ups and downs of real estate investing in the Bay Area, why don't you tell us who is Sean, and then we'll get into the topic at hand.
Yeah, so hey guys, my name is Sean Pan. I'm the host of the Everything Real Estate Investing Show, which is a podcast that gets released twice a week. I also have a YouTube channel. I invest here in the Bay Area and out of state in Jacksonville, Florida. And I'm also a hard money lender with Conventus Lending.
Yeah, and again, Sean's experience goes deep. Again, watch, he's been on the show 3 or 4 times already. And he is a hard money user, right? He has used it to build his business, which gives him a leg up because he is a real estate investor first and a lender second, which is why I invited him to talk about this topic. Because lots of people want to talk to me about lending programs, but they're not investors. So bringing Sean on to talk about it from an investing perspective just made a lot of sense. So Sean, why don't you tee up what we're going to talk about today, and let's go through your presentation.
Yeah, thanks again for having me, Michael. So like you mentioned, I am actually investor first. So I actually use Conventus Lending for a lot of my projects. And because I have my podcast and my YouTube channel, my partner was saying, hey, why don't we partner together to provide some more value for your listeners, your audience base? Because since everyone who listens to my podcast are basically real estate investors, they're going to need some financing in the future anyways. So I found this was a great way to help everybody who is interested in doing deals with real estate. So I'm going to give you a quick presentation on what hard money lending is and how you can benefit from it as well. Mm-hmm. So let me just get these slides up real quick. Cool. All right, you see it okay?
Yep.
Cool. All right, so this presentation is on how hard money loans work. So again, my name is Sean Pan, real estate investor, podcast host, media group leader, and hard money lender with Conventus Lending. And if for you who don't know what a hard money loan is, it's basically a loan where we look at the asset itself instead of your own personal finances. And being able to purchase a property with a hard money loan allows you to buy it basically as a cash offer, and let you buy it with more flexible terms, again, for business purposes only. So it's useful because it's a fast loan. We're able to close within 5 or 10 business days. Traditional lender might take 20 or 30 days to close on the property. Again, the loan is based on the asset itself. We want to see that there's inherent value in it versus your own borrower qualifications. Mm-hmm. Most of the times people use hard money loans for flip projects because a house that has a broken kitchen, bathroom probably can't even get financed by a traditional lender. So hard money lenders come in as a way to basically give this basically cash offer, mm-hmm. and let you buy these properties at a discount. Mm-hmm. So here's how it works. First, you're going to apply, give us a call or fill in the online application. You're going to tell us like details of the deal, property address, what are you going to buy it for, how much do you think it's going to cost to do the construction work, as well as what you think it's going to sell for after it's all renovated. You're going to tell us what your past experience is. That'll determine your rate. And we want to see that you have some liquidity for the down payment and the construction costs. So we do have financing for construction costs, but if you're not getting financing, we do want to see that you have that money in your account ready to go so you can do the deal.
Okay.
Then we do something called an appraisal or BPO, which is a broker's price opinion. We basically want to confirm the value of the property itself. So an appraisal is basically, a full on, they go into every single room, take pictures of every single room, and, they do a full on appraisal. A BPO is more of a look, quick glance, and they can determine the property value that way. If the amount is really high, we do a full appraisal, and if the amount is relatively low, we just do a quick BPO.
Okay.
So we can typically loan between 85 and 90% of purchase price, again, depending on your experience, and construction financing, which is pretty great because you think about a traditional lender normally need around 20% for your acquisitions. Mm-hmm. So for example, if your purchase price is $1 million, then your loan amount at 90% is going to be $900,000. And we can also get a loan to finance 90 to 100% of the construction costs as well.
Mm-hmm. Real quick, Sean, can you go back? Sorry.
Sure.
One of the things we need to realize is a lot of people watching this are not in the Bay Area. So we're talking about $1 million numbers and the things like that. Does Caventus have a minimum loan amount? Like, would you do a loan at 100 grand? Would you do a loan at 50 grand?
I
Do you
think
know what the floor?
150K is like our floor. Of course, we can always negotiate that, 100K, sure, maybe. It's all on a case-by-case basis. But if it's too low, then it's really not worth our time.
Yeah, exactly, guys. So when you watch this, a lot of you are calling me or asking me about, hey, can I go get a 40K hard money loan, things of that nature. Not many hard money lenders are going to do that because of the cost of the loan structure. Really becomes a loss, right? So I would assume that your limit's 100 grand or 150 grand. That's what I would have assumed, but I wanted to get that out so you don't get phone calls that waste your time.
Sure. And for all those who are looking for those lower price amount loans, one strategy that I heard that works really well is you can just partner with another investor, maybe find someone who has deep pockets, who has that 40 or 50 grand, who's willing to loan to you for, let's say, like a flat 12%.
Yep.
That works really well. And I think some companies actually do that because, most lenders don't do like 70K loans or 40K loans.
Yep. Cool.
Yeah. So let's give a quick look at hard money versus traditional financing. So like I said before, typically for traditional financing, you need about 20% down for single family property, which would be around $200,000 that you need to save up for that $1 million price point. And most importantly, you need a significant amount of the debt to income ratio, or you need a significant amount of income to satisfy the debt to income ratio. So for those of you guys who don't know, debt to income ratio is how much you're going to be spending on your financing payments. So like your mortgage, basically your principal, interest, tax, and insurance, plus whatever debt you also have, like your car payments or student loan debt. That all goes on the top number, your debt. And then you divide that by your income before taxes on a monthly basis. So say you're making $120,000 a year, basically your income is $10,000 a month. So you take your debt, divide by your income. That number typically has to be around 43% or lower. So you need about $140,000 a year without any other debt to get a $800,000 loan on a property. And a lot of people don't have that. Like even if you have a high paying job, if you have a house, you're immediately disqualified from this debt to income ratio as well, because you basically need no other debt. Whereas with hard money, you only need about 10 or 15% down, so less money to save. And your financing is based on the asset's value and not your own personal income. So of course there's trade-offs. Like with a traditional financing, you're getting a lower interest rate and stuff like that. But with hard money, you're able to get the deal done because it's based on the asset's value, not your own personal income. So for those of you who don't know what a construction loan is, let's say that you didn't want to pay $100,000 out of your own pocket to do the rehab on a project. Instead, you want to get a construction loan with us. So the way it works is at close of escrow, we don't just give you a suitcase with $100,000 and say, hey, have fun with the money, go do your project, we trust you.
Yeah.
The way this works is we do something called draws. So draws are basically like milestones. You tell us how many draws you want, and at each draw, you say, I'm going to, let's say for your first phase, I'm going to demo the property and put up new sheetrock, and that'll be my first draw. So after that's all done, you call us, we send an inspector, and then they verify that you did what you said you were going to do, and then we reimburse you for that first phase. Like you're the one that determines how much each phase is, and then we reimburse you for it. So if you can imagine it, think about like a high school club. They have a treasury, they have a big account, but the high school kids don't have access to that account. The way it works is the high school kids have to buy things out of their own pocket, and then they go to the school's treasurer or whatever, and then the treasurer will reimburse them based on whatever receipts they give them. That's very similar to what we do with draws. And you can have as many draws as you want, but just realize that every time you send the inspector out, we charge you, I think, $265. So if you need, if you don't have a lot of money to do construction, then it could be good to have multiple draws, because that way you only have to pay for like 1/10 of the project at a time. But if you don't need that much money, then maybe 1 or 2 draws is fine. So like you can pay for the first half of the project, get reimbursed for it, and then pay the second half of the project. And that way you don't have too many inspectors.
Cool.
Cool. So what does it cost? So origination fees are going to be about 1 or 2% of the loan amount. And then you're going to have to pay 9 or 10% for the rest of the term of the loan as an interest-only loan. So back to our example, if your loan amount is $900,000, then right when we close on the property, you're going to be paying us $9,000 for origination fees. But what that really means is that when we come to the table, we're only going to deposit $891,000 to your account, and but we're going to say you owe us $900,000. That's basically what it means.
Yep.
And then 9% interest, you're going to be paying $6,750 a month for the term of the loan.
There you go.
Then basically you sign the documents, people come to the closing table, and the funding gets wired directly to escrow. So you never actually see the money yourself.
Yep.
But the thing is, hard money loans aren't for everybody. So we can't give this loan to homeowners. So owner-occupied properties are disqualified from this because hard money loans are for business purposes only. But the exception to that is if you're buying a 3-plex or higher. So a 3-plex, 4-plex, or other commercial multifamily property, you can live in them, and that's totally okay.
Interesting.
So an example of that is we had a buddy who is doing the Airbnb strategy where he has a large single family house and just has a whole bunch of bedrooms and bathrooms and rents them out one by one. And he joked that he was going to live in one of the bedrooms, and that's a complete no-no. So you don't even mention that you're going to live on the property.
Got it. Okay.
That being said, though, once you own the property and once you fix it up and you refinance out of your hard money loan, you are free to do whatever you want with the property. So let's say you had this house, you intended to buy it as a fix and flip, you flipped the property and you thought, you know what, maybe I want to live in this house. Make sure you refinance out of your hard money loan before you move into the home. Otherwise, we could call the loan due and ask you to pay immediately. It's like a, I think Dodd-Frank regulation or something like that too.
Cool. Okay.
So hard money loans are also not for people who have no skin in the game. So we actually don't provide 100% financing, no matter how good the deal is. We want to see that you're putting in at least 10% of the purchase price into every deal. Now, that being said, you can partner with other investors to help you with the down payment. So you can bring in, another partner who can come up with that 10% down, and as long as they sign on the loan. Hard money loans are full recourse loans. If you do default on it, obviously we take back the property, and we can also come after you for whatever else you owe besides, that.
Yep.
So here's how to get the best interest rates. Basically, if you have a higher FICO score, you ask for a lower LTV. So, the difference matters a lot. If you're asking 90%, 80%, 70%, your rate drops tremendously. If you have more experience, and also if you do repeat business with one lending company, you can get lower rates.
Okay.
So I'm talking a little bit about the company I work for, Conventus Lending. Again, I use them myself, and they're probably one of the best hard money lenders here in the Bay Area. We can basically beat almost anybody on their terms. Mm-hmm. They're a San Francisco-based lender, and they have funded over $2 billion in the past couple of years that they've been active. So we lend in over 22 different states. Here is the full list if you want to take a look at it. If we can't lend in those states, typically I think we would broker out the deal to another lender. Yep. But basically you need to have, some states are weird where you need to have a physical office in order to lend in those states.
Okay.
So we're working on growing.
Cool.
Here are some of our loan terms. Our minimum is around 150. We can go up to 9 million plus. It depends on what your appetite is, what you need. Of course, if there was like a $20 million deal, we're not going to say no. We're going to find a way to make it happen. So obviously we do commercial loans as well. It's not just single family properties. Origination fees go from 0 to 2.5 points. Again, depends on your experience level. Interest rates, 7.5 to 12%. And our terms are from 6 to 60 months.
Oh, that's cool.
Yeah. And we can fund within 5 to 10 business days. Most of our loans are going to be around that 12-month mark. Yep. And what that means is you have 12 months to do whatever you need to do with the project. If the loan goes above that, you can ask for an extension, or you can ask for a refinance on the property.
Okay.
So our loan to cost is going to be up to 90%, which means that your loan to how much it costs to do the renovations, 90%. And loan to value is the loan, basically what the ARV is. We can loan up to 70% of the ARV.
Okay.
Yeah. And our loan position, we usually take first position, or we can do a second position up to 55% of combined loan to value. So what that means is if some people need to do like a cash out refinance or something like that, and they already have, a loan from like another bank, then we can do it, but only up to 55% of the combined loan to value.
Makes sense.
So here are some borrower requirements. We do like to see above a 620 FICO score. They need to have a citizenship, a green card, or valid visa for the US. And we want to see liquidity for the down payment, construction, and 6 months of interest payments. Now, let's say your FICO score is 610. Does that mean you're disqualified? No. You can definitely give us a call. We package everything individually. So there's a story of someone who had, just a really terrible credit score because I think they had their finances with their husband. Husband wasn't taking care of the finances, and they ruined both their credit. Husband passed away. They had this amazing property, basically all paid off, and she needed some money to renovate the property to be able to increase rents and stuff like that. And her credit score was terrible, but because she had a good story, the property was basically free and clear. It was a great deal for us. We still managed to do the deal, but of course, because her score was lower, she had a higher rate for her loan.
Makes total sense.
Yeah. So how we can help? We can help you with your purchase or refi of an investment property, and brokers who have a DRE license in California can charge referral fees. And if you are based out of another state, you can definitely get referral fees as well. But typically, we start the conversation once you have a deal for us. So if you have someone who's looking for hard money loan, give us a call and we can set something up with you.
Very cool.
Yeah. Thank you so much for the presentation. Here's my contact information. You can find me at Sean@everythingrei.com or give me shoot me a text on my cell phone.
Yeah. Let's put the phone number out there because some people will be listening to this via podcast. So his phone number is 408-393-8448. So if you have interest in a hard money loan, you want to ask Sean some questions, 408-393-8448.
Yeah. And let them know that you came from this podcast or this video, and we can give you $1,000 off your processing fee. Usually we charge $1,500, but because you're going through me, we can do it for $500.
Wow. Sean letting you save $1,000.
Yeah.
Thanks, buddy. This is great. Hard money is a big topic. Lots of people hear the word, but don't know what it is and how to get it done. So thank you for taking us through this kind of hard money 101. Guys, let's make his phone ring. You want to give your phone number one more time, Sean?
Sure. Again, you can contact me through email at sean@everythingrei.com. That's SEAN@everythingrei.com, or give me a call at 408-393-8448.
All right, Sean, thank you very much for doing this. Appreciate the 2 videos today. You have a wonderful day.
Hey, you too.
Thanks, buddy.